Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting us today. Can I please get an audio screen check in the Bookmap Discord Trader Lab community and also YouTube? Thank you. Hey, Marty. And how are we doing in YouTube today? Morning, Sam. Okay, guys, let's get going. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades that you can use as a template to reverse engineer and help develop a statistically valid or a trade plan with a statistical edge. The idea of the business of trading, if you're looking to build out a potential career for yourself, is to understand the business you're attempting to be in. And for many developing retail traders, they really are not aligned with the business. And this does not have anything to do with them. It's more about what the fantasy or the idea of this business is. And for many traders who are developing, they don't really understand what the potential solutions are to operate in an environment that is 100% random 100% of the time. Our nature, because of our primal wiring, in my opinion, is to seek certainty and confirmation. However, it doesn't exist here. So what might exist here? Well, that's what the Trader Lab is about and how you might be able to navigate the environment you're attempting to create a sustainable business in. And of course, like everything, past performance is never indicative of future results. But there is an open invitation to the Trader Lab for all developing traders. There's a link in the bottom of YouTube if you are interested, and there is no cost for it. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of losses. It's not suitable for all investors. Past performance is not necessarily indicative of future results. Please grab a pen and paper. Also, feel free to review this stream as often as you care to. Take screenshots. You will see me reviewing structured trades here, which is the primary foundation pieces that I've shared with developing traders in Trader Lab. The idea of Trader Lab is to help you understand how the market works, why it does what it does, and how you can get in alignment with it using structured trades. The idea of a structured trade is to give you something to work with instead of you trying to make it up out of left field. The only thing I think we don't have in our potential careers is unlimited time and unlimited resources or assets. So my idea was to share my experience, which is going on 46 years, of the things I had to do. And I've walked in the same shoes you have. The thing is that maybe you can compress time and accelerate your development if you are a participant in the Trader Lab community. Also, there's a lot of additional education in the Bookmap Discord server, stocks, options, crypto, order flow, of course, with a high tier tool like Bookmap, market maker behavior, algorithmic behavior, and much more. Whoa. So let me give you a couple statistics, and this is important. And remember, the market, the statistics are not the high, let's say the high priority. What they are is when they are in alignment with the current condition of the market, which is called context, then those statistics come into play. It's an alignment business primarily, not a statistically based business in the sense of targeting. But when it comes to statistics, that is where your edge lies and where you need to extract an edge. Because if you're in an environment that's 100% random 100% of the time, then the only thing you can hold on to in this random environment is statistical probabilities. And that's what structured trades are about. And that those are basically template type trades. And then it's up to you to work with them and find out how you can position them in these environments to realize an edge. And only by accepting the random outcome of every interaction with the other participants, just like the casinos do, because they're in the gaming business, same as we are, then the key becomes only interact when you have an edge, accept the random outcomes, develop the discipline to just do your job. In the casinos, if they pay a gambler, they just deal the next hand the same exact way. It's the only way they can extract their edge, and they accept the randomness. And our nature is not to. By the way, as far as these structured trades, there's 60 PDFs of these you can download. They're available to everyone. There are actual trades I've taken. Some of this is research I was doing with Bookmap developers on ideas. Some are integrated now into add-ons that are currently in Bookmap. Others we tossed out the window, but that's the nature of research. These are from 2020. I'm not a vendor. There's no cost for this, and the Trader Lab community is available to all of you at no cost. And I would suggest, if you're looking for a good community to be in, that it's professional, and it's based on our senior trader, by the way, has over 50 years. For me, 46, both professional and otherwise. Now, I was going to give you some statistics. We opened higher inside of yesterday's range. Now, let me give you a couple statistics. And past performance not indicative of future results. You got to bet everything for yourself. Now, the probability of taking out the first hour's high or low is 97% probability. By the way, you guys concerned, I had a little chart hiccup here this morning in my higher time frame software that we did open inside of yesterday's range. Is that correct? Trader Lab? Can I get a response in Discord? Okay, thanks, CMJ. Well, you guys are really, as they say, Johnny on the spot over there. I hope you're trading a little more in a more timely fashion. That's sarcasm, by the way, but it's friendly with a lot of love. Taking out the ETH higher low, 93% probability. Taking out the overnight volume point of control, that's the highest volume in the ETH, which we will discuss, and it is a current targeting area. 82%. Taking out the previous high or low, 81%. Getting to the overnight or ETH mid, 72%. Okay. Previous point of control, 67%. That seems like that would be a long way to go, but it is probable. 50.95 is that price. And then we have a micro composite volume point of control, 51.10. Now, I don't close off any possibilities because it's not my job. As a trader, my job is to position and to attempt to get in alignment with the current condition of the market. And of course, part of the joy is that it's always changing. So we need to be, in my opinion, flexible. And also, we need a trade plan that will give us, based on rules or whatever we do, conditional statements that tell us something has changed. And here's how this works. And now I'll get into, these are going to be structured trades. If this, then that. Conditional statement. I came up with it. It's very logical, but I developed this when I built trading systems. I came up the same way you guys do. I started, well, before anything, there were no indicators. That's how long I've been doing this. And I started in 1980. Then indicators were just coming in with Wells Wilder. What a wonderful time. So many things, so many toys, so much stuff to dig into and reverse engineer. And oh, it was a wonderful time. Throw a few years in the bucket doing that. Then there's oscillators. And then to put it all together, and I began managing money over a number of asset classes. I built systems. So the conditional statement was if this, then that. If not, then what? So if this, then that. And then there's branch logic. If this, then that qualifies X, which would be your trades. Okay. And then depending on that subset of those conditions would be different logical tracks to run down in different qualified trades. That was the branch logic. I hope this makes sense to you. And I've applied that really. Nothing has really changed, except I'm not using a computer. I'm using what's between my ears, which is my brain. So if my brain is now isolating and processing the conditional statements, now I'm using order flow as opposed to backwards looking indicators that are optimized, or let's use the better term for that, curve fitted, which will not represent the current market, but represent the cumulative data points of previous behavior. So I would have to do walk forward. So you go back with a bunch of chunk of data, do walk forward testing, and then come into real time. Well, you're looking back a month. You know what I mean? So anyway, does that make sense, guys? Give me a yes, give me a no, give me a what are you talking about? Fernandez, I'm not doing anything yet with the chart. I'm giving you an overview. Hope you're getting that. Okay, guys, how we doing in YouTube? You guys conscious? And please give a like. Here we go. Now, these are structured trades. Now, let's talk about what we are anticipating. This is the context. What did we do? Let's come all the way back here. You'll find this interesting. This is how context or trade plan might be constructed. And I get questions from a lot of traders. What's the context? How do I determine? And I will tell you, it was one of the more difficult aspects for me because we're thinking in multiple time frames. And I also think in time frames, of course, but there's something else. When I get to the intraday RTH developing quote time frame, I'm no longer using the clock. I use something called fractals because I want to use order flow and get into microstructure. This is something that's important. This is yesterday's RTH highest volume, called the volume point of control. And the volume point of control is where the retailer highest volume was. And the way to understand this whole thing is that it's a shopping experience. Well, if this is the retail price from yesterday, and then in the ETH, which is the next auction after yesterday, if I come down to the ETH low and I test this, and this is a test, I like to use the term horseshoes and hand grenades, and this is too low, and I reject it. In other words, oh, it's on sale here. Well, you can't buy it there. Buyers came for it before this retail price. Think of shopping. Then the possibility is go up. Now, the ETH overnight volume point of control, remember, and by the way, that's about an 83% probability. We tested. Who knows? So too high, and we open above the retail price from the last auction, which is the ETH, then what do we have? Yesterday's high and the previous day's high. And if we get above all this, we have a gap, right? So coming in today, and this is always subject to, change, it was longs for me. Now, we have a process, and I always like to think or talk about the way to think, because what happens in the trade, let's just say trader behavior, if you're thinking the market's going to zero, or tariff, whatever, which it may or may not, that's not our job as day traders. Our job as day traders is to be aware of the external inputs and the fundamentals, but we don't trade the fundamentals. We trade right here, right now. And the market is short. Let's remember that. If the market is short, what happens? If we run out of sellers, who are the buyers? The buy stops. And the stops over yesterday's high. Does that make sense? And also the stops over the previous day's high, which is here. I don't know what you're doing over there. Get over there. Does that make sense? Follow the logic. How we doing in YouTube? Give me a thumb up and give me a hi. Now, let's look at this. Now, the logic, and this is when I learned market profile from Peter Stoudemire, who created it. He was a grain trader over at CBOT. And when he taught it, and he actually taught it to me, and I will tell you, I was so excited because, the auction, this is so logical. I was trading aspects of the auction before I even know it was called an auction. Just saying. but I didn't understand the full picture naturally. I was still coming from indicator world. So I was still in indicator world and I was adding the profile. I made a complete disaster out of the whole thing, but I didn't know that until you put time in and then you keep coming back and waking up with Trader Groundhog Day. So I learned market profile. But here's what else I learned from my experience. That is, if I want to get long, I want shorts to come in. If the market is bearish overall, which it might be, and you want to dump stocks out, think about it. And you're saying, I got to get out of here, and you get a higher open, what might you do? You might sell it. What are you doing? You are responding to the higher open. So to me, that's called responsive selling. Now, everything can change, and we'll get into that. So responsive selling sets up two opportunities for me. One, I can take the short with the responders, but because I have stops here, I skip the short. I'm looking for the long to squeeze out the shorts that come in here, and then I'm going for this. Because there's a high probability, remember, I take out yesterday's high. In fact, taking out yesterday's high or low has over an 80% probability. Let me ask you, do you think we're going to take out yesterday's high or yesterday's low first for this astute group of traders? So let's look at the first trades. So remember, possibility is, and there's a high probability of the ETH high. So I've got a bit of a dilemma here. I can go up and take the stops first, or I can get those sellers and then squeeze them out. So if I have shorts with stops here and I get sellers first, for me, and this is not a recommendation, it sweetens the pot for the short squeeze, because then I have buy stops above these sellers and then buy stops up here going for wherever. Let's see. So let's look at the first trades. And these are Trader Lab structured trades. Now, again, I'm telling you about my plan. I'm not saying it's a good one. I'm sure you can create a better one. I just find something that I can groove with. In other words, it fits my psychology. I'm no longer, let's just say, I've been trading long enough that I can let a fair amount of points go, leave a fair amount of points on the table because I'm positioning for larger rotations. I also don't have to take a short. I could be looking to position for the long. That's me. I'm not saying it's you. Or, subject to the mood, I can look over here in the ETH and see that the sellers were here. Watch. And I get my open. I get a buy sweep. I have, what's this? Liquidity here. This is how you use order flow. And I got this sitting up here. So I know I have a high probability of checking the ETH high, and I have a high probability of squeeze. But what do I see? Before I do anything, I'm looking, here is a buy sweep, and this is ETH, and a selling structure. And it doesn't mean anything other than this. Now I come up, and I come back to where these guys were absorbed. What you see here is selling icebergs and a sweep, which sets up the potential of a counter rotation. If I get selling first, and then I come up and I get a buy sweep, now I have sell sweeps, and I check this. Are these sellers? Now this is important because this is understanding not only order flow, but understanding typical retail trader behavior. Oh, it opened higher, I'm going to sell it. Well, sellers are here. Here's the question I'm going to ask you. If we had sellers here, is it possible that those sellers will come back in here? It's a question. Now, I don't have the answer. I'm not saying it's a question. Let's look. So right here, we come up. Liquidity is here. Now, I have a high probability statistic here. So I'm thinking this will get taken. I can pop this liquidity. I'm telling you just what I'm thinking. And if I pop the liquidity and come down and break, then I have the possibility of a short, or if I feel lucky, as Dirty Harry would say, I can sell here. And I'm going to show you several ways to enter this. One is extremely experience-based, order flow, and the other one is structured. So you guys understand, and by the way, post questions if you have them, I'll do my best. So you guys understand what I think of is I used to use systems and indicators, right? Well, I'm the system. So what I had to do is I had to learn to read the market and process it. So I'm doing the same thing my computer did, except the human brain is much better than any computer out there, even AI so far. So I can process better than anything. And I have unconscious competence and and pattern recognition naturally. But when I get into order flow, I'm seeing the buyers here. What did we see here? Buyers here, buyers here, buyers here. And as far as I know, I'm going there. Okay. Buyers here. Liquidity is in here. Sellers are below the buyers. This is my first inclination of a possible short right here. However, now my liquidity comes in. So I'm thinking short here, but like you, I'm going because I'm above this. This yellow line is the developing volume point of control. It is the retail price. It's the same thing as I showed you down below at the ETH low against yesterday's volume point of control, which is called the naked volume point of control. In other words, highest retail price from yesterday's RTH. This is a developing volume point of control. It is the highest volume right here, right now. And what's important about this is think of this like shopping, and this is the retail price. So right here, these buyers were absorbed, and the seller says, nah, here, forget it. We ran out of buyers here. Sellers are below the buyers. I come back and test. Now, right here, no clue. What do I know? These guys were absorbed. What I don't know is if the buyers here are going to take out the sellers that are above here. No way to know, part of the thrill of randomness, and get to the first statistic, high probability. Instead, I come down, I break here. This sets up a short. Let's look. Watch. Now, so this is the first trade. So the short, now this is advanced. So for me, I'm going to show you microstructure. Now, I want you guys to know, this is not something you're going to get quickly. It just doesn't work that way. Life is not that kind, especially to traders. I'm going to draw a couple lines on here to show you some structure. And I'll explain what you're looking at. And remember what I'm doing here. I'm reading order flow, but I'm also encapsulating it for you guys that don't read order flow well yet, or don't understand or haven't really seen the advantages of an order flow tool. So I'm using price action, which is the output of this behavior. Hope that makes sense. Break here sets up a short. Now, under the mid, under the VWAP. Now, right here, now I'm going to go down into more advanced processes. And this is not something you guys ought to be thinking much about, but this is now advanced. I'm moving away from primary structured trades into fractal trading. Fractals are the same as this, where the developing volume point of control is, which is their retail price for the whole day. Now I'm going down. Think of it like layers. And the comparisons, Matryoshka dolls, Russian dolls, you know what those are, right? The little things, they fit inside each other. Well, that's all a fractal is. It's a Russian doll. So the volume is here. Let's read it together. So right here, sell sweep. When I see a sell sweep, I anticipate a move higher. When it fails, and I'm coming down and I get my buyers here. So right here, sellers are absorbed. There's a buy iceberg. 152 sell stops coming out. Thanks for playing. By the way, this is the opening swing low. Stops are below the opening swing low. I forgot to mention that. So break. This is where the buyers were. The sellers are here. They're absorbed. The buyers are out here. They were absorbed. You see how you read it? Now, because the buyers were here, when I break below the buyers The buyers are here and they can't get back in here. So aggressive traders using price action could sell this one tick under with a stop 3 ticks above. You have to vet this. I'm just throwing that out there as an idea. And then we come back here and check. You could enter here, 1 tick below, stop 3 ticks above. Then your job with a minimum 2-lot configuration is to get risk neutral on the first contract, minimum, and it's up to you to vet this, and then trade management or trade to target. Let's watch. Let's watch. Notice, see the behavior guides? Is everybody tracking? These are structured trades. And and I shared these because I think developing traders can begin to integrate an understanding of market mechanics. Now, there's a couple things here. For me, other than taking shorts here at the opening, I understand or at least perceive the possibility that these shorts are going to get thrown under the bus at some point. So I'm looking to get long, but while I'm hanging out here and working on my crochet, I am looking for longs. So I don't know where that'll come in. This is part of the thrill. Let's watch. Notice the behavior, back to the volume. Is this making sense? Can you guys see kind of what I'm doing here? Is that a yes? Is that a no? Please give me a like if you're visiting in YouTube. And don't forget, there's a link in the bottom of YouTube if you're interested in visiting the Bookmap Discord Trader Lab community. Notice the retracement. Notice where we're coming back. If you vet these, all of these are shorts in the Trader Lab. See where we are? High volume came out of here. That's our microstructure. I'm not paying that. Are you sure? No way, Jose. Break low. Test. All these are shorts in the Trader Lab. And there's more structure here, but I want to move along. I just want to show you some basic ideas. Now I'm looking for a long, don't forget. Liquidity 5250. This is a potential target. For targeting, you could have a limit order sitting here and you could be done with this. Up to you. And where was the first short? Wasn't it up here? Or here? That's a 20-point trade. I could handle that. How about you? Now, here's another short. This is a advanced process. I share this in Trader Lab, and I posted this in Trader Lab. I don't call trades, but let me show it to you. Now, this again, we're getting advanced, and I'm going to strongly suggest, because there's more to this than a line on the chart, that if you like what you see and you think it might help you, that you come to the Trader Lab community. Let me show you this. Let me come back here. So target is here. You could have a limit order 1 or 2 ticks ahead of this, and you could be done with the trade. And then there's another trade. Now, here, let's watch. We're coming down. Right here is something called a low volume node. You see the contracts there, 44. That's low volume. So we come outside, we break, we get our target. Right here, when the market moves quickly, like this, what that is called low volume because we didn't do the chopateria here. In other words, all of this is consolidation. And when you have these consolidations, there's volume. You see the little high volume node? So if I just drew a little line over here, just going to throw one in here so you can kind of see if I can get it there. Maybe I'll skip it. I'm getting a little there. So this is like a little auction. Sellers are here, buyers are here. If I break down, this area here becomes resistance, just saying. And the acceleration leaves something called a low volume area or node. Now here, because there's liquidity resting, we're going to get some volume here. Let's just look at it. Now this is advanced, okay? So right here, sell stops coming out and we have an iceberg sitting in here. Watch. Bounce. Remember where resistance is. It's up here. Okay, right in here. I'm going to put another little line in here just so we don't forget where it is. And right here, don't forget a target. And this right here is a sell sweep. Stop and iceberg detectors, what you're seeing here, and this is sweeps, detects. Now, when I see a sell sweep, this is potential support. Why? I had buyers there. Now, the thing we don't know is support, are we going to get those buyers again, or are they done? Now, this is part of the thrill. No way to know. Sell sweep, it's either this naturally or that. If I break below, it sets up a continuation short. Let's look at it right here. It's a trader lab process, and you would be selling against this. Advanced configuration, it is available in those 60 PDFs I always mention, and I also, cover it in my webinars that I've done. So resistance, liquidity comes back, micro high volume is here, trigger. This is the same thing I'm showing you up here, but you could just look at this. Now, let's say you're sitting here with the jaw on the ground and you get another trigger. Where is resistance? I'm going to draw you a little box. Actually, I'm just going to throw a line in here. Easier. See it? Support, trigger, resistance, entry, helmet, stop is there or there. Up to you. Distribution of volume, it's there. And you can see it right here in the profile. That's why I use the profile. Profile's not a system, guys. What it is an ability to see the distribution of volume and participant behavior. If this is too high, and the sellers are here, and the sellers break away from it, then we come back and check. Liquidity comes in here. This is how order flow helps you. Micro high volume structure is right in here. So resistance, okay? Continuation short. Now, you get your risk neutral, you manage your trade, you put your helmet on. Now, still anticipating it going lower, I have liquidity coming in over here. Let's see what happens. Micro composite volume point of control. No, wrong. Sorry. Where'd that come from? This is stale. I wonder, hold on a second, 52, 28. 1 second, guys. See if this fixes it. 7. Errant. This, I don't know where this is. Delirious. So some of these levels might be a little wrong. So watch. So this is the area to observe. Now remember, my objective is to get long, right? Now, here, so I have liquidity here, and I don't know where it's going. It's just like, what's up? I don't know. Watch. Now, here's something that there's two elements that are important here. This is called a low volume node, which we had a short up here. Remember, I pointed it out to you, and it's related to this liquidity. I'm going to label it. And what we're looking at is something called distributions of volume. And all in the profile, you might think you landed on Mars, but what it is too high, too low, retail. If a retail price, which is this, is too high, we'll leave it. And if we fall out, then and these are all micro auctions. So too high, too low, retail. I'm not paying that. Too high, too low, retail. Get out of here. And it goes on and on and on. Auction. That's what rotations are. So inside of these rotations, I'm looking at the volume. If you look over here, you'll see the volume. Outside edge. What is an outside edge? Low volume node. Too expensive. Retail. I'm not paying that. Let's come down and auction the next layer and the next, and we just keep going, right? Until it changes. Now, what does change look like? Great question. I always ask myself the same question, and nothing is clear until hindsight with a lot of this. So all you can do is do what you can. So liquidity is here, and as far as I know, which means I don't know, we're going wherever because I can't predict anything. But this is a nice short trade. I think you'd already make your day if you were taking these structured trades, and you have to vet them. Now here I see what appears to be a change in behavior, but I have no idea. So I just look at it. I mean, why wasn't this a change in behavior? See, so when I see this kind of thing, I'm going, that's interesting. And I notice something I really haven't seen before. This is darker than all this other tripe that's in here, except for this one. But then see how the market bounces off? And then what's this? Resistance. This is not so much. And now this is here. So I'm thinking I got to be paying attention to this. Well, then this comes in, and there's no way to know. So this is just, there's nothing absolute in any tools. Wouldn't it be nice if we had that? So I get what I think might be a change in behavior, but no clue. And then let's look. Notice the change. Now I'm looking at this, and I'm going, well, this volume now might be too low. And I say might because I have no idea. This was too high. This is our resistance right here, you see. Support, resistance, and it's this volume up here. I'm going to just draw a little node on here so you can see it. So basically, as we're coming down, so too high, break, test, too high, break. What's over here? Watch. Too high, sellers are below the buyers. See you later, alligator. Volume is there. Volume is here, break. Volume is here, break, test. You see how it's working? Kind of get the idea? And if the volume is here, this is resistance. Going to zero. Here, break high. Warning Will Robinson moment. Resistance, support, support. Let's see. Notice the behavior. Sellers are here. These guys got absorbed. That's where you see the green bubble. It doesn't mean put your foot on the accelerator and get long. It means that there were aggressors here, and there were also icebergs in here. And so what I see is selling icebergs, selling into these buy stops. I also call this stop divergence. This is another little concept. This is the only thing I use from indicators since I don't use any. I read the order flow. That's my quote indicator. I don't need something that measures price. I am reading price and volume. That's order flow. And the other elements, iceberg, stops, liquidity, all this. So all those are the components. So I see the stops. So what happens here? Let me give you the micro. I have the icebergs, but I have less stops coming out as I go higher. Let me try to open this up if I can for you. Eight stops, 6 stops, 5 stops. That's divergence. You guys all know about divergence. Well, if price goes higher, and why is the market going up here? Is it buyers, initiators, or is it buy stops? It's both, of course. But if I get a higher price and I see less stops and I have no initiators above this, then it's possible that I'm going to rotate down. And where's my support? It's here. Sellers are here. And what was under here? There's stops under here. There's stops under here. This is my support. Now, there's no precision, wouldn't you like it? Doesn't exist. Looks like it's going to zero, right? These sellers, let's look again from the other direction. Coming down, support. No. Sellers are beneath. What do I got? 7 sell stops. What happens over here? 1. Stop divergence from the other side. Support. Clueless until it crosses. Watch. See the support? See the absorption? And if you had a stop sitting right under here, you probably get picked off. I really don't know. Watch. Notice where the support is. They were absorbed. See the change in behavior? See the test here? I'm not saying you would buy this. If you were very skilled, you could buy it. Or, let me give you the or. Notice where we come, by the way. This is resistance. This is support. This is support. Now, out here is a low volume node. I'm going to label it. And let me tell you the significance of these things. As long as we're in this distribution, we have boundaries for it. And we have another little piece right here. Let me see if I can do this. I'm just going to label this for you. This, if we look at this, this is the outside edge. This is an outside edge. Now, this is the current low at the time, called the initial balance low, but it's not locked in yet. It locks in at the first hour, which would be 9:30 Central Time, my time. So this is the outside edge, too high. This is too low. You see the low volume, only 75 went off there. And this is called the high volume node. And what the way the market tends to work is it will rotate. Oh, I'm not paying that. Retail, because it's the high volume, in this, and then down here. Oh, it's on sale. And then come back here. So we can rotate here and auction this. So this is the auction. Now, when I take you into fractals, we're doing the same thing here. Outside, outside, high volume. Outside, outside, high volume, micro. And then going up. Outside, outside, high volume. Does that make sense? Are you guys tracking? By the way, if you're interested in the Trader Lab, there is no cost. There's a link in the bottom of YouTube if you're interested. Download the 60 PDFs of structured trades I show. It's a basic overview. Now, this is advanced trading, but the things I have shared with you are a little bit more fundamentally oriented, so you can kind of get kickstart your development. If you're interested in the business of trading and you can relate to shopping, why do we have a market? It's the purpose of the market is to discover what's too high, what's too low, what's just right. And it does it in all time frames and fractals. So as a day trader, you could slice and dice this and trade in any, quote, time frame you want. For me, well, it doesn't matter what I do, but if you're a developing trader, it's a little more, the idea is that you get more oriented towards statistical probabilities, not playing a video game. Because if you can put statistics on your side, you're now in the gaming business, which is actually the business we're in, and you're working with something called a statistical edge in a random environment. So we don't know where the low of the day is going to be, if that is indeed going to be it, or if we're just going to fall out the bottom and keep going, or take out the top. Now, remember the premise at the top of the stream. Get shorts in the market somewhere. In other words, what's called responsive selling. So they respond to the higher open, sell, and then they become the buyers, and the goal is to come out yesterday's high and the previous day's high and potentially get into the gap. That's the goal. Doesn't mean it'll do it, of course, but that's the plan. And that's all posted in Trader Lab. And that's just possibilities. Everybody develops their own plan, and everybody understands when the conditions change. Remember, like a trading system, conditional statements. If this, then that. If not, then what? If we go down first, then we're looking for the squeeze. So right here, this is the outside boundary of this. So if you're in here, you have choices. You can be selling out here to come back here and then to fall out the bottom. Or if you're thinking we're going to take out yesterday's high, you're looking to continue with the selling, but you're on guard that if we come out of this area, now we're going to squeeze all the shorts. That's the plan for today. So let's just look at the trades. Notice where we come. we test the high volume. So if this is too low and we test it, and again, no precision, where's our support? Here. Where was our resistance? Here. If you get long, here, 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 wherever you get long, your stop's got to be under here or under there if you're, and then you get the buying. Now, this is like the bullet train. So as soon as this happens, watch, where's our support? Here. We get the VWAP. Now, retail traders sell the VWAP. Nothing wrong with it. And what is it aligned with? Our low volume node. So subject to, and this is where your trade plan comes in. You could, and let's look at where we come. I always find these things kind of amaze me because it's almost like you can't believe it, except where was our resistance up here and what's it in alignment with? 53. What's at a low volume node? Stops. If we come out and we get mid VWAP and there's resistance, now let's look at a trigger. And the trigger is mean reversion to the downside, maybe. Where's the mean? Well, it's going to be over here. Let's see if we can get there. That would be your target. Watch. So this is this, and then possibly out the bottom. Or it's this to this, and you're done with it here. Or, I'm giving you the or, you're looking to come out of here and then squeeze. So my plan, when I saw this is a viable short in TraderLab. If you don't have a structure for it to get in, you don't have a trade. Just saying. So if you can't trade this right here, then you just go, oh, next bus. But this is an outside in called mean reversion. So if you think the trend is down currently, even though I'm looking for longs, you can take the long out to the LVN just in case, or you can take the short back to the HVN. All this is TraderLab, and everybody does their own thing. We'll have traders taking longs, other traders taking shorts, and other traders are waiting for their vetted trades, and they don't have a trade here because you have to survive the learning curve in order to improve and add more trades. So the idea of TraderLab is to give you tools and to help you build it one at a time. And you have to do the work. There is no plug and play. Wouldn't it be nice? If there was, we all would have found it. I would be glad to have plug and play and have an ATM in the basement. Doesn't work that way. So support, outside edge. Now, this is my outside edge of the distribution, here and here. If I get above this, then I'm rejecting this auction, and now the squeeze is on. Let's look. See the behavior when we come up here again? Watch. Watch the behavior. Now, right here, I'm coming out of this distribution, right here. It's changing. So right here, when it comes out of here, I'm going, okay, off the shorts. Where am I going to find a long? Let's see. Watch. Liquidity comes in the book. It's a disruptor, and I'm looking for longs. Support. Now, when we come down here, I'm looking at this. Now let's look at what this is. This is a consolidation, right? You've all seen these before. And so this is too high. And this is where the buyers are. And the volume is now in here. I break high. This is a trigger in a higher time frame if you want. The volume is here. So the entry would be around here, and the stop needs to be under here. Okay. Now, if you're using, and that's price action. If you're using order flow, you've got sellers, you've got support right here. You've got sellers going down. Next support is here. These sellers get absorbed. There's the buying iceberg. Those are the sell stops. And I break high. Now I pull back. This can be support. This is more order flow based. If you're just doing price action, you would be taking more risk. And if it doesn't fit your risk parameter, then you have nothing to do. Or you just wait for it to come back and check this. And again, I can't predict. Nobody predicts. I find for me, if I have a location and my stop has to be outside of my risk parameter, I just skip it. And then I get my buyer, and I know these guys were absorbed. And now I pull back to support. I can enter in here. Stop is now under here. Any of these. And here's the other key piece. I'm above this area. So I'm rejecting this high volume node, which is my retail price. So now I know I've got my shorts, which is my plan. Now I have liquidity here. Let's see what happens. And I'm going for the current high of the day and the stops over yesterday's high. That's the plan, finally. Now, this comes in. Remember where resistance is. These are all from earlier, right? This becomes support. Watch. Now, right here, and I looked at this and I thought about it and I said, well, I'm going to try to stay with this thing. Right here, my liquidity comes in the book. I have a micro selling structure right here. I have a sell trigger, and I come up here and I have a buy sweep. This is a short in the Trader Lab. Now, I didn't take the short. I'm just staying with the long because I'm looking for something further outside. I took a stop and I came down to where? My high volume node. What was this? It was too low. The nature of the auction is to check pricing. Liquidity comes in the book. I know this was too low because I left it, so I get long again down here. I'm off the shorts now, other than getting abused like we all do. And the plan from this morning was this. Now, this comes in the book. I also have, I think, the ETH high here, which has a high probability. Yeah. So this is my next target, right here. So I put my order, so a long scale ahead of this. I don't mess around for a couple ticks. This has a high probability. But when this stacks, and I posted this in Trader Lab, when this stacks, I get out ahead of it. I just don't care. I'm not, rigid. One thing about day trading is you got to be flexible. Now it's runners. Yesterday's high, going for stops. Support now is here. Outside edge, LVN. I posted this in Trader Lab. See if you don't see something familiar. You'll notice on the short side, I was using these low volume nodes for this kind of thing. Mean reversion trading. You can learn this in Trader Lab. I want to get to real time if I can. I just want, because the idea of Trader Lab is to help you learn how to trade. Doesn't do you any good for me to kind of what? Show you I can click the mouse like you? Nope. There's plenty of time for that. This is support, break high, support, support. This is called mean reversion. These are longs if you're in Trader Lab. And we're going north somewhere. You'd like to know? I would. Now, where do we come back? Where's support? It's right there. Right there. Okay? It's called outside in trading. Mean reversion. And it's mean. The joke in Trader Lab is mean reversion's mean. Support, longs, support, longs. 5,300 liquidity, watch. Scale, subject to. This we have to take out to keep going. Now, my next target is this. This is not yesterday's high, the day before, and then up into the gap. So this was my next target, which was here. Then I get a buy sweep. Buy sweep is a warning Will Robinson moment. So right here, I need to get above this. I reach above it. I'm thinking it's all wonderful. I break low, too high. Now the choice becomes hit the button, the eject button, blow the canopy off, and off you go, because then back here. Or stay with it. That's up to your trade plan. Let's watch. Remember where resistance is. Just remember. What do we have to do? We have to clear this. That's our resistance, order flow, and micro high volume structure. Let me put a little node, a little line out here for you. So if we're trading in fractals, what we're looking to do, got to get over this. Why? Too high, too low. Retail. If this price becomes too high and I break away from it, sellers are here, and I come back and test it. The sellers are here. This was too high. I got my selling iceberg. No way to know, by the way. And then we break again. There's trouble. And this is your resistance. Now, we get something called VPOC migration. This is a key moment in the auction. It's called the variable high volume node. I made the terms up. Nobody was doing this when I started doing it. I didn't even know what it was. I observed it, and then I researched it because I said, why is this thing moving? What does it mean? It's not so much that it does it. It's like, well, what does it say? Language of the market. I speak a foreign language. And if I can move this thing, there we go. I track these because it's the highest volume. And as the volume moves around, it suggests a retail price. But what do we know? This is a fractal of the same process. If this is too high and I got my sellers, then this moves up in the developing daily time frame. This is multiple time frames, right? As you think of it. Here's what has to happen here. This moves up. If this now is the new retail price and this is too high, I need to push off here and get through there. That's my resistance. This is my price. Now, here's the opposite of that. If I break low and I can't get back above here and above there, there's big trouble. This is my next area of support right here. We took it out. There's trouble for the longs now. And what else? We're under the low volume node, right, of this distribution. So while we were sitting here, these are longs. Long, long, okay? All longs. Resistance. Who knows? Resistance. Sellers take control. Resistance. Sellers take control. It's like, come on. You ever talk to the market? I always have some choice words. And then right here, VPOC migration needs to do this. It takes a shot. I'm still thinking we're okay out here because this is our outside edge. See where the buyers were? Buyers are there, buyers are there, buyers are there, buyers are there, buyers. So, buyers looking for this and not so much. Now we fall out of the distribution. Trouble in River City. Time to get the barge turned around. Let's watch. And now it's time for shorts. How we doing? So we fall out of this, and now we're out of this. So there's trouble. Liquidity jumps in the book here. So there's a couple things you can do here. This comes in here. This is liquidity sitting over here. I break. It's micro high volume. I have this as a reference, and we come back over here. This is where the liquidity is, and I'm underneath everything. Low volume node is now here. Let's see it. So now I have to turn the barge around, and it's short. So you could be taking shorts here, here, here. You notice how I showed you the advanced process when you break liquidity? you break under it and you test it. If you have an advanced process in place and we're in alignment with the low volume node, remember, location, location, this is a short pullback. I mean, all these are shorts now. There's no longs at this point. And we have a statistical probability, which who knew? Not part of my thing. I'm looking for this. These are on here. I got a feeling. And this, okay? There's an 82-ish% probability we get here. Remember, top of the stream. So now it's down to here. Also, at 9:30 Central Time, there's this, the IB stat. And of course, I thought it would be the IB high. Doesn't matter what I think. I just trade. And there's over a 97% probability we take out either the first hour's high or low. Well, all things considered, going south of the border. And so this is the IB. So we have structured trades in TraderLab. If you didn't get on any of this, at 9:30, we're looking for it to come out below the first hour's low. This sets up a short. This is a structured trade. You can learn this in TraderLab called the IB continuation trade. If you're not short, this is your trade. And you're going for structured trade. These are in the 60, you're going for this, 82, 83% probability. Notice where we come. So you have a short here. You have a short here. Subject to your trade plan, you might have a short here or not. I'm not saying you do. It's up to you. Micro high volume is there, and resistance is up there at off of this. Let me show you the microstructure. I want to get into real time. If you have questions, I haven't been. They're on different monitors, so I can't look. Let me show you some other stuff. This is the initial balance. So you have a trigger. You have resistance here. You have resistance at the bottom of that consolidation. That's one way into it. There. If you pull back, your resistance is still there, there, there. All these are short entries if you're in TraderLab. Microstructure is here. Trigger resistance would be like around here because the sellers are in control here. The buyers are in control there. We're below them over here. You get a little sweep, says potentially rotation up. This is all valid entries if it's in your plan, or you just need to be short in here and you're not doing anything else. And you're going for the overnight volume point of control. As a structured trade, if you're getting in around 35, you're going for this. Does that work for you? What is that, a 50-point trade? Help me with the math. I don't know. Liquidity comes in the book. Now remember, trade management. Look what happens here. Now we come above this. Right here, there's a couple things you can do with this. You get the sell sweep, you have the liquidity. If you come back above here, you could be out of the trade. That's one. Or you're going to sit through a counter rotation and risk giving your dollars back, which always can happen, and you're going for the statistical probability. Up. Some traders hold. We have one trader named Rod in the TraderLab. You know, he sits in a Barca lounger when he trades. Now, let's look a little further. Where do we come here, guys? Does anything look familiar? What is this? This is the IB. And what does it set up? We still have this to an almost an 83% probability. What might you do with this? Let's think about this. Structured trade. Come on back here. No clue, by the way. Resistance, location, location, no way to know. Let's look at the trigger. I want to get into real time. It's bugging me. Sellers are here, exhaustion. Buy stops are coming out, selling icebergs, selling icebergs. That's useful. Now what? I have my sellers under my buyers here. I have my high volume developing there, right there. Outside, location, location. No. 83% probability-ish. Past performance not indicative of results. This, you'll notice this guy pulls. This is called liquidity marker. It's in Bookmap. It's really cool. And you notice there's 100 gets pulled, 100 gets added. Would you suspect maybe it's the same guy that wants to buy? Well, if I can see this, I'm going to scale in front of it. And I still have my statistic down here. Let's see. Scale. Where do I come back? Liquidity comes in the book. Now, some of this is advanced, but I'm just trying to give you a little sense of what you can learn in TraderLab. Notice how this comes in. This is advanced. Watch. Buy sweep, liquidity jumps in. It's like somebody putting a roadblock up. Break, sellers. So buy sweep, liquidity, test, buy sweep. This is an advanced short. You can learn this in TraderLab, but you need the broad strokes first. Target. Trade's over. Are you guys tracking? Questions? Let me see if I can get out of here. Oh, there we are. Okay, questions, guys. Thanks for your patience. Gabriel, Rhythmic is not delayed. How are we doing in YouTube, guys? Are you guys following? By the way, if you're interested in the Bookmap Discord TraderLab community, use the link in the bottom of YouTube. There's no cost for this. There's a library of webinars, the community itself, and a lot of material, trade plans, psychological aspects of trading, which is, I think, the most difficult part. Over the years, I've trained a lot of traders on a trade desk, so a little different. You know, we can sit there and work with somebody one-on-one, but most traders have similar obstacles. One is managing, I think the toughest one is managing the emotional triggers. I've found, for me at least, and other traders that I've worked with, that it's really about not being attached to the outcome. Now, I know that's ideal, you know, because we're all attached. We all root for the team. You know, we all want to have a winning trade. I get it. But the need to win is not the reason to hesitate or take more risk because you're looking for certainty. We all want to win, but we don't need to win on each trade. We need to have an edge and execute it. Let me get back here. Because over time, that's the only way you can extract the dollars from the other participants. It's the only way you can do it. Okay. When you break under this here, this sets up a potential short. I didn't narrate it, so forget about it. But it's the same reasoning of micro high volume or naked volume points of control and all of this. It all works the same way. So this, notice what we had here, this liquidity. So we reacted off it. Let's look at this a little bit. This guy came in the book. We broke above it, and then we broke below. So this is resistance. Right here, it doesn't get back to it, okay? So you might not have a short here. But when you break below this and pull back to it here, and then you get a high volume structure here, and you have a trigger, and it pulls back, this is a potential short, but it's advanced. I didn't say anything about it. I just want you to see what it is. I don't multitask well. And the reason it's a short, so you know, is now this is too high. It was too low in the ETH, right? Well, now we're back. If we break below it, then south of the border. And let's see where our next targets are. Here. Okay? Does that make sense? Are you guys tracking? Hope you're getting something out of this. Please give a like if you're in YouTube. Support the channel. Visit the TraderLab. There's no cost for it. And I like to point that out because how much have you spent over the years on your trader education? And the other thing is, not to be negative, but what do you have to show for it? we can learn a lot, but if we can't translate our education into a vetted, structured trade plan that we can execute, then we're not really getting a yield for our investment. In fact, that investment is trapped. There's a saying here, kind of like, what is it? Einstein said, what's the definition of insanity? It is just doing the same thing over and over again. And the thing with Trader Groundhog Day, and I did a webinar on it because that's what I did, I was changing what I was doing, but they were all derivative of the same process. I didn't understand that I had a defective process, but I had random winnings. So the problem I had was I kept winning, but not winning enough. So I'd have streaks of winners, and I think I just have to make it better. So that's why I built trading systems so I could make it much better. And what I did is I curve fitted it and got great statistics because I can now generate all these numbers instead of doing it manually. But in the end, it was the same. So I kept reflecting on it. Now, the thing is and I was doing trend following and in the S&Ps, the big ones, swing trading, 3 day swings. And this is in the 1980s, okay? Mid 80s, late 80s. So that's when I was managing money for firms. And then I also had my own company or my own advisory firm. And then I just managed dollars. And there's a lot more to the story, but that's enough, I guess. It's not about me. It's just that I've done everything you've done, and probably because of my time in a lot more. I've also, worked with hedge fund and quants, and over my developing career, I got pretty good at what I did, and but the learning curve was really ridiculous. Now when I look back at it, but I didn't have anybody to talk to. There was no internet, no, really nothing. So it was a very isolated process. So my learning curve was really ridiculous. I mean, if I knew what I know today, of course, but I didn't, and there was no access to information. The problem you guys have today is you're overwhelmed, and you're overwhelmed with probably a lot of information that has no value to you. But that's something you decide. We're all adults in the room here. Right? Anyway, next target is this. So this is a short in the Trader Lab because it's too high right here. And the target, this is all structured trades, are this. And it can go lower. That's not, the thing. There's an 85%-ish probability we take out either yesterday's high or low. So statistically, I'm not looking for that. And it doesn't mean, when I say looking, the statistics don't favor that. But remember what the trend is at the top of the stream. It's down. So when we look for the squeeze, that's okay. But we have to be conscious that the shorts that came in the morning can become the buyers. They get squeezed out. But the other side of the coin is us, the buyers in the morning, can become the sellers and the stops. So that's why there's nothing fixed. And that's why when I educate, you might say, it's not rigidity, it's flexibility, but also defining conditional statements so you can turn the barge around. And I don't turn around quickly because the market has to fail structure for me. Other traders are going to trade in shorter fractals, so they'll be getting long and short, but they won't be holding. I have found, and it's just me, I'm not, and everybody adjusts, themselves to their psychology, that for me, the broad strokes are where the opportunity is. The 20, 30, 40-point rotations. And then if I take a stop, as much as I'm annoyed, and that's it, emotional response, in the scheme of things, it is still cost effective for me to put the risk on because my yield is much higher than my losses, you see. So that's, everybody finds their groove or what speaks to them and fits their psychology. But also it has to have an edge. You may feel really risk adverse, so you get in for little pot shots. But if you're taking full stops and not maximizing your opportunity when it shows up, that might not work for sustainability. Because remember, we're in a business here, right? And the goal of being in business after you pay expenses, which for us is stops and whether other fixed costs we might have, is to extract the yield. Liquidity comes in here. Remember, we're trying to go here. So subject to your trade plan, you could be managing these trades, getting out, putting it back on. Not my thing. I just don't want a lot of activity. If I get a structured trade and I have a core position on from outside, out here or wherever it is, I may take another trade and then scale it and add, or just kind of a chip shot. We have a trader in Trader Lab named Patrick. He golfs. And so when I think of chip shots, I think of Patrick. He's been trading over 50 years. Makes me look like a puppy. I'm only going on 46. So that's a heck of a time to be doing this, isn't it? You guys have questions. Let me come up for oxygen. Thanks for your patience. What setting is where you set the price? High volume nodes, Lex, micro high volume structures. So these white lines, when I put them in here, I'm looking at the fractals. So these, like here, as an example, if I scrunch this up, let me show you. This is the chart volume profile. It only shows me what's on the chart. So I'm looking here. I'm seeing the volume in this thing, this chop. It's a consolidation. So when you can see too high, too low, the outside edge of the let me draw a little box around this, Lex, so you can kind of see what I'm talking about. So consolidations are, buyers and sellers interacting. Hi, how you doing? You want a piece of lettuce? And let me just get this kind of here. You'll see this here, the outside edge is up here, the outside edge is down here. This is the retail price. So if I draw a line where the high volume is, it's going to be there. So support, the buyers are here, the sellers are here. I get my sweep, and I have a sweep here. This is suggesting to me downside rotation, downside. If I break here, that's a trigger, and I come back here, this is a potential short if it's vetted in your trade plan, or it's nothing, Now let's look at this. I come back, my location, I get my sellers again. So right in here, I have more high volume. I can be taking shorts here, here. There's the volume. See it? Anywhere there's this volume, I can lean. It doesn't mean I won't get stopped, because at some point, everybody's trailing behind these things. So, and remember what we're looking for, right? It was a continuation trades out of this. Short, short. This is all Trader Lab, and this is our target. I don't know if we're going to get there, but that's just sort of the way it is. Oh, okay. Don't know where we are. ETH low, and this is the retail price from yesterday. The nature of the auction is to come back and check prices. If this is too high from the ETH, and this is an outside edge, there, I'm still looking at this. Not a recommendation, guys. Anyway, Lex, does that kind of give you an idea? Which shows numbers in the chart for volume, buy, sell? Think? I don't have any numbers on my chart for buy, sell. I'm not sure. These are selling icebergs. These are buy stops. Is that what you're referring to? I'm not interested in vertical volume. You see, I'm interested in delta, a different animal. And delta is showing me the aggressors. What is important about delta is what happens to those aggressors. If I have 140 buy stops, as an example, coming out here, and I have aggressors selling, which are the icebergs, that's what I want to see. Do these buyers get absorbed? That's what I'm interested in. And if I come back to those areas, do those sellers activate again? So volume in and of itself for me doesn't mean anything. I used to look at volume, vertical base volume. So there's a lot of buyers here. Well, what does that mean? Doesn't mean it's time to get long. I mean, it could, but for me, it means why is the market lower? Because there are sellers, the icebergs. We're taking, and the buyers, the delta, are stops. Well, if I come higher and I have less of something, that's divergence for me. So for me, this is more short. Anyway, I don't know if that helps you there, but like some, you have further questions, come to Trader Lab. Kieran, volume buy sell, there's nothing, I don't use it there. It's not material to me. Now these bubbles are filtered, but they're also aggregated. So when I put this together, you'll see I get a big bubble. And if I open it up, I got a lot of little bubbles. And the more more micro I want to see, I can see it. But it doesn't, the volume is not what's material. It's what happens. Buyers are here. Why didn't the market go up? I mean, I can see the volume if I want, but it doesn't do anything for me. It's the absorption. This is why order flow. Volume in and of itself doesn't mean anything in the sense of as a day trader. What matters as a day trader for me is what happens to the buyers, not that there were buyers. What happens? What's happened? Why is the market not going up? These are buyers. Because liquidity is chasing the market down. And what's sitting out here? See this? That's material to me. It's at the low of the day. What does that suggest? Potential to test the low of the day. And again, where's my target? Not a recommendation. It's here. Now, how does it get there? That's part of the joy of randomness. So I have no clue. I don't know. It's not my job and not even my concern. I think just missed where this is actually right there. So, jumped on me. This is resistance, except it jumped on me. So resistance is here. I'm not going to keep doing this, but you can see where it is here and there because the sellers are here. So now we got to see what it does. So if I'm looking to short, I'd be looking to get short here. My stop has to be above here. It's not a trade recommendation. Why might I do that? I've got an outside edge here, low volume area. I've fallen out of this auction. These are all fractals. High volume is there. That's what that is. I'm not paying that. If I fall outside this low volume node, then I'm auctioning this thing. And in the microstructure, and this is in the wrong place, remember, it's supposed to be actually against this. I'm going down in, as you think of time frame and fractals. If this is where the buyers were, sellers are in control. That's why volume in and of itself doesn't mean anything. It's what happens. Sellers are here. And we got buyers sitting over here. So subject to your plan, and this is not a recommendation, you want to get risk neutral. So the worst that happens is you scratch the trade. And that's the primary structure in Trader Lab, which is a minimum 2-lot configuration. You have to vet these for yourself. You're going to take stops. We all do. I take them every day. It's just overhead and cost of production. The casinos pay the gamblers every day. It's just the way it is. So next target would be here, not a recommendation. And then the ultimate target, which never has to happen, is this. So we got to clear this. And the market can go up anywhere, do anything. It doesn't matter. That's where trade management comes in. I hope that makes sense. Are you guys tracking? How are we doing in YouTube? How about a like and visit the Trader Lab? Use the link in the bottom of YouTube. By the way, Rod fell out of his Barca Lounger, I think. We have a trader in Trader Lab named Rod, and he kind of, I think we trade somewhat similarly because he puts a trade on and he goes for the larger swings. And it's a double-edged sword for all of us that trade, because you can be up 20, 30 points and give a chunk of it back. And that is definitely disturbing psychologically. However, how do you know what's the best way to go? You have to keep statistics and records, because even though you give back a chunk, which, some of us might get despondent over that, maybe over time that nets a much larger basket of points than going in and out, in and out, in and out. Most developing traders think it's easier to go for shorter targets. What they don't understand is they're limiting their opportunity while keeping their risk constant. That might be a recipe for not staying in the business, because it does not have an edge, though you're going to have winning trades, you see. These are all the things you need to really root out and have a structured trade plan, so you know where your edge shows up. And it might mean what you're doing today, it absolutely has no edge, but you have random winners, you see. Let's watch our behavior. Notice the stacking of the liquidity here. There was a liquidity here. These guys came in, and these guys are front running. Now we can anticipate, depending what happens, a counter rotation from here, or we just take it out and this is our target, and it's not a trade recommendation. If you want to visit the Trader Lab, by the way, while it's still available, and I can assure you, unfortunately, I'm not going to be doing this indefinitely. I can't trade. It's very hard for me to try to trade and do this. So I had to make a rule, and sometimes I still sneak a couple trades in, but primarily it requires for me 150% concentration to read this in micro. So when I'm looking to trigger, I'm going to open this up using an order flow tool. I'm going to look at the liquidity and the behavior, and I'm going to anticipate what happens right here. If I get my buying here, then I have either the possibility of trade management, or if I'm in a higher time frame, I have to be willing to give it back. That's why this was important, that and that. You see? If you understand order flow, you would know it. Now, the other part of this is you would also know what you will do before it gets there. That's what your trade plan is. If you have to go, what should I do now? You don't have a trade plan. If you're going, should I get out? What should I do? And now emotions are controlling you. Fear, FOMO, all of that. Then you need to come to Trader Lab or somewhere where you could actually organize yourself to become a consistent professional trader. Otherwise, you're just gambling and playing a video game. That might not be the path to sustainability. Again, that's up to you. But if you don't know the answer, then you should be asking the question and you should get the answer. And the answer is not what will happen. It's what might happen right here and what you will do about it. Where's support? It's here. Now, what is the trade that we're looking for? This, settlement, and this. That's our target, not a recommendation. Please give a like. Thanks for visiting Trader Lab today. Remember, if you go to Trader Lab, there's a link in the bottom of YouTube. You can download 60 PDFs of structured trades, reverse engineer them. This is a blueprint that you can use to begin to develop a structured plan. Also, there's the Trader Lab community, community of serious traders. You can access this in the link, and there is a library, if I can find it, of webinars that you can access. Here we go. It's the pin, and start here, primary webinar. Then watch this one, Meet the Trader Lab, Advanced Trading Education, what this is about. And then watch this one. I planned, I saw, I traded. After that, why do most retail traders use indicators fail? And Trader Groundhog Day. That's when you work hard and you keep waking up with the same results, even though we all have winning trades. That's the Trader Lab. Please give a like on the way out. Thanks so much for visiting Trader Lab today. Feel free to Visit the Trader Lab. There's no cost. And like everything, nothing's forever. So as long as it's available, consider taking advantage of it. Thanks again, guys. Look forward to seeing you guys tomorrow. Have a super day. And don't forget the like on the way out.